stock market performance over the first quarter of 2024. And I think looking at the market on a day by day or quarter by quarter basis is not this isn't necessarily the best way to make investment decisions, but nonetheless, it's I think it's interesting and worthwhile. So two things I really just wanted to point out off of this chart that I found interesting is this persistence of outperformance of the U.S. stock market relative to international markets since basically the financial crisis. This historical relationship that has existed between U.S. and international markets has broken down. What I mean by that is that for so long you had this relationship where the U.S. market would go up and then it would come down, and you would have these maybe couple year periods of time where the U.S. market would outperform, and then it would underperform international markets. Well, since essentially, maybe a little bit after the financial crisis, like 2011, that relationship has broken down, and it's far beyond me to explain the why behind that, but to simply describe that, yes, that has been the case where U.S. markets have just exploded for the last 10 years, and international markets have lagged far, far behind. So interesting that general trend or theme has continued through the first quarter of 2024. You can see here generally looking at the U.S. market, S&P 500 over the quarter, up about 10.5%, and generally looking at international markets, the developed countries, so let's say Western Europe, Australia, Canada, and Japan, and then emerging markets, Mexico, China, Brazil, performing relatively poorly. So interesting there. I think if you're working with a financial advisor, you've probably, maybe they've, you've heard for the last, 15 years, oh, we need to be diversified internationally. And that's what all of our textbooks taught us when we were in college about investing and being diversified internationally. And so obviously it still does make sense, in my opinion, to have some of your money invested, broadly, because when that pendulum switches or flips, you don't want to be left out in the cold, not experience any of the growth from international markets. And then also, it doesn't have to be an all or nothing thing, investing in just an entire country. We can't own pieces of countries. We can own pieces of companies. And so there's, some of the best companies in the world are found outside the United States. So definitely still worthwhile. And this is the last chart that I want to look at. Sometimes it's interesting to do a breakdown of the U.S. stock market and look at the different sectors, the different components of the market, and to see, how each of those sectors are performing. And it's very interesting. I think probably when you think of the stock market, most of us think about Microsoft and NVIDIA and Apple and Google. There's a lot more to the U.S. market than just those big technology companies. So interesting, over the first quarter of 24, energy has been the top performing sector, along with, we really have like three boring kind of parts of the U.S. economy that have done the best. And then at number 4 here, we have technology bringing it in. Now, interesting, looking at poorer performing parts of the market, still real estate has really struggled. And I think this continues to be the impact of interest rates on the commercial real estate market. So I guess here an honorable mention, looking like actually the third best performing sector this quarter was financials, interestingly enough. So we've got energy, financials, and communication services for the top performing sectors, kind of an old school economy quarter, you might say. So anyway. So I hope this was fun for you, looking at different aspects of the U.S. economy, the stock market, and some of the things that can impact the way that we invest. I think looking at politics and the way that it affects you as an investor is just an endlessly fascinating exploration of what's going on in our minds. And interesting how we can make investment decisions that are detached from the objective reality around us. It's easy to get caught up in a narrative, be it positive or negative, about the future. And so I think this is, looking at the charts, it's important to keep a long-term perspective. And I think always taking with a grain of salt anything that, be it positive or negative, that we hear in the news about our party of choice. Interesting that the U.S. consumer still is just chugging along and in great financial shape. I didn't look at these charts today in this video, but U.S. assets for consumers relative to the debt that they have and relative to the debt service that they have. Low levels of debt service, how much of your, on average, somebody is paying to, pay credit card or mortgage or student loans or auto loans relative to their overall income, still in great shape. And consumers just have a ton of assets. It's interesting, over COVID, there was just a lot of paying down of debt. And so your typical consumer's in great shape. And because of those long run trends in the real estate market of underbuilding for the last 10, 15 years, there's still this chronic undersupply that I think is going to have a positive kind of floor on real estate prices and make it very difficult for those prices to drop dramatically like they did in the financial crisis. So at any rate, hopefully this has been interesting for you. So with that, I'll catch you next time.